Market has been, we've been seeing a little bit of traction here in the last couple days. As you can see on Friday, we did see very much panic ensuing, selling pressure here last Friday. That's how we looked on Friday. We closed at 540 or so. And Monday morning here, when we woke up, market gapped up. And as you can see, we were able to protect this up gap. As you can see, as of today, that up gap still remaining open. There are few attempts from the bears to fill that up gap. As you can see, yesterday and today, those lower wicks telling us the bears want to fill that up gap from Monday morning here. Why do they want to fill this up gap? Because if the up gap, this is an up gap, meaning it gapped up, right? This up gap, as the longer this up gap remains open, it's going to favor the buyers. As you can see right here, there's a down gap. And you can see how quickly things got extremely messy here for an entire week last week, right? All that panic selling occurred with the down gap, and the down gap was not filled. Because keep in mind, we talked about this on the last weeks or 2 weeks ago or something like that, on my last video analysis, that bulls are trying with the gap ups, right? There was a gap up here, failed. There was a gap up here, failed. There was a gap up here, failed. There's a gap up here, failed. But when gap down happened, not failed, it was sustained. When the down gap was sustained, you can see, because buyers been trying to gap it up for days. And with all that energy that was wasted trying to gap it up for 5 times here in a week and a half or so, all it took was one down gap, and you see how quickly bulls gave out, because they already spent so much of their energy trying to gap it up and trying to sustain that up gap. And of course, after bulls push that thing pretty heavily, as we know, from about 510 or so, pretty much vertically here. And bulls just didn't have enough energy to keep pushing higher. So they needed to rest. And as you can see, that gap is still open. And bulls managed to try to stay above that micro term here, that aqua squiggly line. And I am here to report to you, as of today at close on the last hour, you see that short-term moving average? That's the green moving average here. This is the first time since the decline right here. You see that green moving average. This is where we lost the micro term and the short term with the down gap. And this is the first time since this downturn, right, that bulls were able to stay above the micro and the short term. And definitely you can see the presence, the weight of the short term, because yesterday or this morning, you see that short term? This is this morning's gap up. So we gapped up, hit that short term, it tanked. And then we continued lower, and then we got back up. But on the 6th hour, you can see bulls became a little bit more brave here, a little bit more audacious to battle that short-term moving average and able to close above it. Again, that's the first hour here, rejected, last hour here. For now, staying above it. Perfect. And you can see midterm is residing at 549.72 at close, and obviously the midterm did act as resistance there. So for the micro to short-term sentiment to shift fully back to bullish, bulls will need to reclaim all the moving averages and hold above it, and only last moving averages here right in the midterm. And make sure, we were just right on the short term though, on the last hour. that might not be enough, because if we open lower or something like that, we see a down gap below the micro term tomorrow morning, and that down gap is sustained, none of this means anything. So what bulls need to do here, bulls need to dodge a down gap first of all, and need to stay above the micro and short term should there be any kind of shenanigans in the first 2 hours tomorrow morning session, and they need to get above the midterm. But I think going into tomorrow, as long as no shenanigan down gap, I think it favors the buyers. Go look at this oscillator here, the oscillator resistance coming down. First of all, you can see when there's no traction in the market and the oscillator has been hitting that overbought, basically telling us that bulls are tired. So we talked about this 2 weeks ago when I was doing the video here, that bulls are getting tired. Bulls are getting tired. So you see that we overbought, extreme overbought. We stayed there for a while, and you see how bulls were not able to go anywhere, because during that time while the oscillator was resetting here, you can see the oscillator middle of nowhere. This is overspot, this is oversold, in the middle of nowhere, just doing nothing, and then finally gave out. And because of that, oscillator was, you see that we got lower highs and lower lows, and we have that falling resistance here. And this all took place, ladies and gentlemen, because I was watching this. And if we would have not seen this 3-hour rally today, we would have seen the oscillator curling back down right on this resistance. And things would have gotten a lot uglier, at least filling this up gap from yesterday morning. But because we reclaimed the micro term on the 3rd or the 4th hour, we stretched, breaking above the oscillator resistance here. And this is actually a bullish signal, and this favors the buyers. Perfect. So as far as sentiment is concerned at close, it looks like it market wants to favor the buyers going into tomorrow, unless of course we open lower with a sizable down gap. And things can get very, very ugly if that's a little down gap, is fine. So that's what bulls need to dodge. Probably best bet is, maybe open flat, slightly lower, or slightly open higher. That might be the best bet for the bulls, and stay above some of these moving averages. And there's a good chance that we continue higher, because as you can see, that oscillator is not overbought. Bulls been resting here for several weeks now. And so maybe they're ready to tackle once again this boss bear command center at 565 and 560, those two down gaps. You see a huge move it took place during 2020 that happened with that oscillator, monthly oscillator oversold there, went all the way to the top of his band. Finally, that oscillator fully reset. That's 2023. We did make an initial move, come back down. It's been consolidating for year or so, and finally we crossed back up. But you notice that how we got slight higher low here. That's actually an advantage, because that tends to happen when the market is ready to establish an uptrend once again. Again, it's a premature stage, because as you can see, that oscillator just crossed up, and after the September or the August session, so going into September, we just crossed up. So we have to make sure towards the end of this month that the TSLA is not coming back down to the below this symmetrical triangle pattern here, and stay somewhere here, or even break out. So I think towards the end of this month, we can kind of confirm and solidify this bullish cross there. Another one, this is Google. So as you can see, this is a oscillator double bottom. Look at these double bottoms, right? You see these little double bottoms and oversold. That's all oversold level right here. That's all overbought. Market goes up, comes back down, boom, and then we get into a rally. Same thing here, little up and down, boom, little rally, maybe several months, pull back. This one though, this one didn't even need the double bottom there. We pretty much V-shaped higher. We got up for several 4 or 5 months. But that double bottom showed up again. It hasn't crossed up yet though as of today, but this is a signal that could potentially be bullish for Google. because also you can see we got the rising support here. We hit that. Also, there's another support. We're in that vicinity, and the oscillator is oversold. We got the bullish divergence here, what we saw in August. There's another bullish divergence. Bullish divergence, basically what it is we make lower low, and then the oscillator makes higher low. And also you can look at this as a sort of like a mini inverted head and shoulder formation. We got a left shoulder head, potentially right shoulder here, and that's what we call neckline right here. And once we got above the neckline, you see that rally for about a week or so, and that's a potential setup if we can stay and break above 109 or 110 or so here.